and welcome to Purple Rasaa podcasts. Early stage founders often struggle to find the right resources amid an overload of information. Purple Rasaa was born out of this need to help these founders access resources that best fit their needs. Our Purple Rasaa podcasts are fueled by curiosity and are meant to inform and empower founders. Follow us for more content and remember, stay curious and keep hustling.
Hello, everyone. The theme of this podcast is Expert Talks. Purple Rasaa podcasts are fueled by curiosity and aimed at empowering founders, students, and anyone interested in keeping themselves informed. The Expert Talk series is our attempt at making complex information access to all. And our expert for today is Mahidhar Krrishna, partner at Purushottam and Co. And Mahidhar is a fourth-generation chartered accountant and a certified fraud examiner. His expertise lies in statutory audits, taxation, forensic audits, and investigations, and due diligence. Through this conversation, we aim to simplify the seemingly complex world of tax and compliance with a focus on startups. We will also explore how tax compliance impacts investability and why it is important for every founder or everyone to be a tax literate. Oh, hi, Mahidhar. Welcome to this podcast. Good to have you here.
Hi, Shisha. Thank you for having me. I'm pretty excited to be here.
And it is also the time of the year in Chennai when flyovers become parking lots. How is it today?
Oh, today is good, but on the weekend we had a cyclone that had hit, I think, passed between Chennai and Pondicherry. And I think Saturday we had about 10 hours of rain, continuous rain, and of course, our infrastructure, so there's flooding everywhere. It was not as bad as the previous floods, but yeah, it was quite bad. I mean, some of the low-lying areas were flooded, and so things are coming back to normal. I think yesterday, today, and should get better.
Good to know. In 2015, I actually lost some of my property. I was in Chennai in 2015, so I know how bad it gets there. But let's start with a bit
Yeah.
about you, Mahidhar. You're an
Yes.
alumnus of Vidyamandar, aren't you? So take us through your background and what led you into a career in tax and compliance.
Yeah. So yes, I did my schooling here in Chennai in Vidyamandar, Mylapore. I was there from my first grade to 12th. And I think, around your 10th, 11th classes when you have to decide what you got to do and pick a group, right? Either science or commerce. I actually wanted to do science, interestingly. And but I guess my marks weren't enough. And the school was initially hesitating to give me the science group, computer science. And that's when I think one of my uncle kind of brainwashed me saying, hey, you have this firm, it's a legacy firm, you should do CA. And I think it was like for half a day he spoke to me and I was completely convinced. So I changed to commerce, and thus the journey of pursuing CA and chartered accountancy came into picture. I think after, so when I had done CA, there was CPT, and then which is like a multiple choice question. This thing keeps changing every 2 3 years. The CA formats. So CPT, you have to clear CPT, clear at least one group in your intermediate, and then do articleship. I did my articleship with KPMG in Chennai in the audit practice. I was there. Once articleship got done, I cleared final, and I had an interest towards forensic accounting, forensic audits. That was something new that was coming up back then in 2016, 17. And there were very few firms. I think the big fours only were doing it, and just probably a handful of boutique firms. And one of the articles who worked in my current firm, he ended up joining forensic practice in EY Bombay. And he told me that's when he spoke to me is when I thought, wow, okay, this is such an interesting field. So I worked in forensics for about 3.5 years, and then I joined back the family practice. I worked in Hyderabad actually, so that was good. Something very different from what CAs traditionally do in terms of audit tax. But this is like you said, fourth generation family practice. Once I came here, I started taking over for my father in terms of our legacy clients. There have been clients who've been associated since my great grandfather's time. So taking over and getting busy with this. So, and that's when, I started getting a lot more exposure to tax and started specializing myself in a little bit of more tax work. So that's about it. And here we are.
Right. Well, thank you so much for taking us through your background. And the hot news currently this week is the PAN 2.0 project, which is a PAN card with a QR code, and this can
Yeah,
apparently save you from fraud. Let's speak about this initiative and why it is important a little later in the podcast. But let's
yeah,
get started. This is going to be a loaded discussion. So let's start with
yeah.
some basics. A fundamental question to you, Mahidhar, is around why tax matters and why should anyone pay their taxes?
Yeah, I think everybody mostly knows that taxes is what is the primary source of revenue for governments, right? So it's the income for governments, and you can say paying taxes is somewhat like a social contract between the citizens and the governments, and the taxation money goes into public infrastructure, education, welfare schemes, and that's the basic source of revenue for the government, and how they spend that on various schemes, of course, depends on the budget and uh, various themes of the political party in ruling. But yeah, the taxes, I would say, are fundamental to the government. In India, the constitution basically gives the central government and the state government to levy taxes, so the power is given to both of them. And the central taxes, for example, are something like your income tax and corporate taxes are levied by the center state, while there is GST now. But yeah, earlier there was service tax, VAT, excise. Those were taxes at the state level, or even something as simple as your property taxes, right? Property taxes, corporation taxes, um, uh, those are basically done at the state level, right? So in India, that's how the broad structure is, and yeah, that's about it. And I'm sure everybody everybody have heard that famous saying by Benjamin Franklin, which says that there's so much uncertainty in life, but the things that are certain is your taxes and debt. So you can't avoid it. It's
You
there
can't
in
avoid that.
anything. Yeah, it's there in everything and everything. Your
In fact,
indirect
that's
taxes also. Yeah, it's there in your. You buy a biscuit, there is a tax component to it. So it's there everywhere.
In fact, I remember my first chartered accountant first told me when I started filing my taxes, you can avoid anything, but you can't avoid tax. So
Yeah,
I think that goes
exactly.
without saying. Moving on, if paying tax is necessary, then we should speak about compliance. So some
Right.
context before we move to the question. So compliance decision is guided by moral sentiment, and there's a theory called theory of planned behavior, which is that compliance intention can be leveraged only when the tax system creates an optimal environment for taxpayers so that they can comply with their compliance obligations. And to add more context to this question, on the 29th of November, the IT department sent notices to Volkswagen for alleged tax evasions up to $1.4 billion. And the revenue
Yeah.
in India operations was in 2023 was only $2 billion. So you can understand the scale. So allegedly, they had willfully paid lesser import tax on components of their high-end cars like Audi and Skoda. So
Yeah.
my question to you is, what is the cost of non-compliance?
So yeah, I mean, uh, it's very simple. No, I mean, taxes is basically a moral obligation of any citizen or any business, right? So I always tell my clients and a lot of people who come to me saying, hey, it's okay, you don't there's nothing wrong in spending a little more money and taking proper advice, because the cost of non-compliance is a lot more than the cost of compliance. So it's like the, the penalties can go up extremely high, like the case you mentioned about Volkswagen, and even the Vodafone Idea case, if you remember back then in 2012, 13, or I think little before that, it had gone into millions and millions of dollars. And that was also because of some kind of structuring and some kind of something they tried to do, and it didn't sit with the government and all of that. So yeah, definitely your cost of non-compliance is a lot more.
Right. And a follow-up question to it would be, how do governments actually ensure citizens and companies stay compliant?
So I think they do it. I would say it's a mix of regulations, technology, and behavioral factors. So regulations is, of course, they start introducing laws, like we covered upon in India. You have the Income Tax Act for corporate for basically your personal income and corporate income. and you have GST, which is for all your indirect taxes. GST was in fact in 2017-18, it got consolidated into a single indirect tax. Of course, there are exceptions for certain kind of goods, but earlier it used to be a lot more. There used to be so many laws, service tax, VAT, excise duty, and all of that. So regulations is one where the government try to enforce to increase their tax base, if I can say. And the second part I would say is technology. I think India has been pretty ahead in the curve in terms of adopting technology for tax. GST, Income Tax Act. I don't think, in the last 14, 15 years, anybody would have filed a paper return. Like if you talk about Income Tax Act, it's so digitized now. And of course, when the new portal comes in, there's always hiccups and, people, it gets a little difficult or the volume gets too high. But in terms of capturing data, in terms of ensuring that more people start paying tax. Technology is something that they use. And if you talk about behavioral aspects, I feel that over the last couple of years, or maybe even a little before that, there has been a lot of behavioral change in terms of people wanting to pay their fair share of taxes. Gone are the days where you want to create some kind of a complex structure to avoid taxes and do some, fancy, fancy structuring. So it's people want to pay their fair share of taxes and not ensure that they don't get into trouble. I think disputes can come in a way, it can come in a situation where your interpretation of the law is slightly different from what the department takes, right? So you have a difference in opinion, and that probably goes into litigation and appeals and so on and so forth. But I think from a morality point of view, corporates in general want to pay tax and be compliant. And I think now with ESG coming up, um, being tax compliant is a part of the governance umbrella of the ESG framework. So that is also a shift that we're seeing. So I think that, of course, behavioral is more of a in-person thing, but the government, I feel, have been using technology like crazy to increase their tax base.
Okay, that was a loaded answer. We spoke about a lot of jargons, but we will touch upon them as we go through the
Yeah.
podcast. And you brought up a point about last few years, you've seen compliance actually going up. And my question
Yeah.
is then the next question is going to be around it. I'm sure you would agree that important factor for compliance is tax literacy. And
Yeah.
actually, a study conducted in Indonesia among 50 MSME owners, it concluded that there is a positive effect between taxation knowledge and the level of understanding towards tax compliance. But many MSME owners are still confused in implementing tax regulations within their companies. And do you see some kind of a reason why there's been a lot of complaints in the last 2 years? And do you think our education system at the graduate level is doing enough to prepare our students to understand tax and compliance? What basic knowledge about taxation should an entrepreneur have?
Right. Yeah. So taxation comes under the ambit of compliance, right? So I feel every business owner needs to have some basic knowledge about it. And you are absolutely right in saying that it's the tax literacy is quite low in our country at the under UG level. I think it's, of course, students who study BCom and who are in the commerce field get definitely some exposure to tax, but then again, that is also a very theoretical knowledge. Of how taxes work, and there's a lot of practical aspects to it, which I think that they get to know only when they come onto the job or they do internships. Like even we get some BCom students who come and do internship, and I feel they really learn, okay, this is how a GST return actually looks, and this is what you're supposed to do. So I think uh, taxation being there at the undergrad level for, say, an engineering student or an art student, I don't think it's there. And there are a few students who I know who probably take that as an additional course to learn a little bit of it, provided they're interested. But I don't. I think broadly it's not available, and that's a pretty macroeconomic decision of the government changing its education policy and stuff. But I think people who are starting out, people who want to start their own business, should know some basic amount of taxes. And I think now that we are in the digital age, there's a lot of online resources and free resources that are available or you can take up some course on an academy, Upgrad, Udemy, whatever these platforms are, to learn a little bit of what are the tax laws and compliances in India. And of course, there's also YouTube, a lot of free content available. But my advice for that is, you just take that somewhat as an information and not as financial advice, because you don't know how qualified that person can be, and that scenario may not really apply in your business prima facie, because it varies from industry to industry or sectors to sector. Uh, that's about it. And I think there is a lot of online stuff that people can learn. And I feel founders should have some basic idea about what tax is. They don't need to be an expert, but they should have what an idea. Okay, what is a TDS return? They should understand that, okay, they should have this obligation of deducting tax at source, and this is when it'll apply. Otherwise, ignorance of law is no excuse, right?
Correct. And drawing some parallels, an influential founder once told me about how do you disrupt the D2C sector, the direct to consumer sector, and compete with a brand that has more than 60% market share. So the simple thing that he said was get them young. So it makes absolute sense to get them started at a young age. And I remember
Yeah,
it was a rude shock when I was told by my dad, after completing my first year at my job, that I had to file my taxes. I had no clue about what it is and how am I supposed to go about it. Took me some time to figure it out, but it's always good to know about it before you actually get into it. Moving on
true.
to the next section, Mahidhar, there's going to be a deep dive with a focus on startups. We're going to up the ante
Yeah.
over here a little. Um, Here's a common question we get from aspiring founders and some clients we speak to. And this will hopefully also give clarity to our larger audience, many of whom are aspiring entrepreneurs looking to understand the intricacies of starting up. So, if I start a firm while registering, how do I choose between the various entities like LLP, partnership firm, private limited? And how does this decision go on to impact the way I run my business and raise funds?
Yeah. Yeah, that's a good question. So the entity is the mode in which the founders does business, right? So in India, broadly, you have the sole proprietor, which is basically it's you and the entity are the one, and you have a partnership, and you have some forms of corporate structures, which is the LLP or the limited liability partnership, and private limited company, public limited company, right? So I feel that in our case, founders would probably want to look at a more of a corporate structure, which is something like an LLP or a private limited company. One of the key reasons being, when you do a structure like a sole proprietor or a partnership, you are exposing your liabilities. Your liability is basically unlimited, right? So you're exposing your personal assets and maybe even ancestral assets into um, so they can be held liable or attached for a case. So you are personally liable, including your assets. When it comes to a corporate structure like an LLP or a partnership or a private limited company, you have it creates like a level between you and the entity. So the entity is a separate legal entity on its own. So you get registered with the register of companies, ROC or MCA, they say, and that gives you some sort of a protection. Your liability is limited only to the extent of the capital you put in, right? So your personal assets are not exposed that way. And it's I think uh, when you want to also go for funding and all of that, having a corporate structure uh, having a corporate structure will give you a little bit of more legitimacy, and that's what investors and even bankers will prefer in terms of having that structure. And from a tax perspective, also you have the LLP and private limited, where it's a little different. If you take the limited liability partnership, it's like a single tier tax structure. I'm not getting into details, trying to keep it pretty simple. It's a single tier tax structure, and if it's a private limited company, it's a two tier. What I mean by this is, in simple terms, any money that the LLP makes or the partnership makes, the profits gets taxed at that level, and the partners can take out the money as tax free money, because it's like a share of profits. But In a private limited company, the company pays some amount of tax, and when you want to distribute the profits in terms of dividends or salary, so that gets taxed once again in the hands of the shareholders, right? So, so these are the structures.
And is it possible for somebody who's wrongly selected entity that may want to go back from a private limited to an LLP or vice versa? Is that possible?
Yes, absolutely. An LLP can be converted to a private limited company and the vice versa. So it's a pretty simple process. To be honest, it's just some amount of paperwork that needs to be done. And what we normally recommend for founders who are starting up is when it's very much at the ideation stage and you still haven't finalized on what kind of structure or your way forward, we would suggest you keep it simple as a partnership or even as an LLP, because an LLP, the operations are very easy in terms of compliance. Administratively also it's quite simple. A private limited company has a little more additional compliance and a little more paperwork that needs to be done. um, and it's quite simple to convert from an LLP to a private limited, and to go back from a private limited to an LLP. But of course, the while it's easier said being done, there needs to be a little more thought that goes into it, because there are some tax implications in when the conversion happens. But yes, it is possible.
Right. I mean, I recall a founder who recently told me about having registered his company as private limited, and the fact that he has to go through compliance at a very frequent rate through the year, and now he wants to go back to an LLP. He's trying to explore that. And
Yeah,
an article in Forbes actually talks about this. It talks about the pitfalls of entity formation, and a lot of founders do the DIY approach, do-it-yourself approach, and this will actually only lead to a lot of complications in the future. So it is extremely important to consult an advisor at this point. And
that's absolutely true.
correct. So moving on, tax compliance is number one. It's the willingness of a taxpayer to one abide by the applicable tax laws wherever they reside, file tax
Yeah,
returns, and pay the dues within a stipulated time period, which
yeah,
means the onus is on the taxpayer to ensure that they follow all the rules. So with
yeah.
this context, please speak about compliance calendars, GST or TDS, the difference between the two, and the importance of registrations.
Yeah. In India, I would say that your responsibility for taxes kind of start from day zero. What I mean by this is you have a transactional level tax, right? So which is basically called tax deducted at source, which is kind of applicable from the first payment that you start making. uh, Let it be you want to pay your rent, you take a co-working space for your registered office, and you want to pay rent, you want to pay your professional charges, you want to pay a contractor, you want to pay salaries. All of these, there is a tax implication or a TDS, tax deductible source, that needs to be deducted, right? So that needs to be basically, if you're paying 100 rupees and the TDS rate is 10%, you have to pay 90 to the person, to the party, and you have to pay 10 as tax to the government and file returns, so that tax is available as credit to them, right? So I feel that the tax obligations start from day one. So for this, I feel it's very important that founders need to get their registration sorted. Now, I think over the last 5 6 years, it's become quite easy to get these registrations done, because when you register a company or an LLP, your PAN, TAN, and EGST registrations also, you can get all of that done as a single form, because the government has realized that to do all of these registrations, they ask for the same kind of proof: your address proof, your EB bill, property tax, etc., etc. So they've kind of brought it all into the single form, and you can get all registrations done. You don't need to go and stand in front of the department or an officer and say, "Hey, I want a PAN number. Can you give me TAN?" And it's become quite fast and very simple nowadays. And even GST, right? So even GST has become even if you don't do it as part of the incorporation, it's a complete online process. Of course, there are some difficulties here and there, and you need to get your paperwork, should your address in this proof versus that should match, or else it'll get rejected. There are, of course, nitty-gritties that need to get resolved. But the process has become quite simple. And yeah, with respect to GST also, I would recommend that founders, once they uh, know that they're going to start doing business, they need to get their GST registrations done. Because from the first bill that you, of course, there are thresholds, but GST will start applying when you want to start, when you start generating revenue or when you want to book expenses. In fact, when you want to get, when you want to onboard your company with certain larger players and what do I say, larger corporates or MNCs, they would insist on having a GST registration because they will not want to deal with a company which is not GST registered, right? So it gives you also that sort of what do I say, that validity and that sort of this thing. So it's very important that you do that way. And of course, your TDS and GST, you have after registrations, you have monthly, you have the obligation of deducting taxes or paying GST, and you have monthly, quarterly, and annual filing obligations that you need to do. Um, and in terms of, I would recommend that founders be aware of basically what are the timelines and when these returns and filings have to get done. And I think probably having a compliance calendar or a dashboard will make things quite easy. There are a lot of, I think there are a lot of players now out there which give you pretty simple dashboards, and you can plug in the due dates and ensure that you're staying compliant. And again, like with respect to TDS, for example, the income tax department, your implications of not deducting tax is very high. What we see is there are founders who kind of think, okay, I'll do this once I grow. I don't have to bother about it now. But the implications are so severe. I'm just taking an extreme scenario where the department can, um, initiate prosecution proceedings. Basically, it means somebody can go to jail, right? So you're withholding government's money and not paying the government their share. So they can, of course, it's done in very extreme scenarios, but you open yourself up to that kind of a liability when you don't, when you miss these payments. We see founders paying from their personal bank accounts and paying from their credit card and then not deducting taxes and then accounting it subsequently, and also all of that, it starts opening you up to liabilities and prosecution and and interest penalty. All of that also starts applying.
This is what you speak about when we use the word tax literacy. It's not just about knowing,
Yeah.
learning a little bit of tax here and there about how you save tax, but also about understanding compliance. What can go wrong if if you even miss one deadline. So glad that you brought it up, Mahidhar. And the follow-up question is also on a literacy point of view. How important is it for a founder to outsource compliance, and what is the right time to bring in a chartered accountant or a professional?
I think there is always a contention on when do you seek professional help, right? So my personal belief is to seek help, is to have a professional help, is to have help from the beginning of your journey, because apart from just being compliant, a professional can also help you in terms of structuring your business, pricing, and there are so many other factors that people can do. And if we just talk about the compliance part, I think broadly people actually interchange a lot of them. But broadly, I would say there is bookkeeping, which is basically your accounting, and you have tax, regulatory compliance, which I will put in one bracket, and then you have the finance, right? So people think bookkeeping or accounting and finance are the same, but I think they're completely different, right? Bookkeeping is basically the transactions have already happened and you're basically recording what has happened. But with respect to finance, it has a lot more to do with projecting your cash flows, understanding where your money is coming from, where money is going out. It's a bit more futuristic view, is what I would say. It's also about understanding in terms of your receivables, how long is it taking for your receivables to realize, or basically for your customers to pay you, or how long are you taking to pay your contractors and your entire working capital management and stuff. Uh, I feel it's very important to have the right set of people for each of them. And the third bracket I would say is basically tax. Sorry, second one, yeah, the tax regulatory compliance, which is basically your TDS, GST, ensuring you're filing your returns on time. I feel seeking help at the early stages is very critical. It's founders should probably talk to engage a professional who I feel they relate with and who probably understands your business, because, and of course somebody who's very passionate about working with startups. Um, because when you have that similar kind of a wavelength, it makes working with that person much easier, right? So it's important to have somebody from the beginning, I feel, so that they can guide you in these aspects from day one and ensure that you don't get into trouble.
Right. Okay. We've done great so far, and this is the last section, and we'll focus on taxation and its impact on investability.
Yeah.
So when a founder is raising funds, do investors actually scrutinize the compliance history?
Yes. So when an investor is looking to invest in your company, they do something called a due diligence. Um, I would broadly categorize it into three sorts of due diligence. One is financial, where they look at your books and your accounts. One is on a tax and one is on the tax. I would say tax is somewhat sort of a financial due diligence, but some investors do keep them as a separate scope. And you have the legal, so legal and secretarial compliances. So definitely, they would, an investor will always engage another professional to do a deep dive due diligence on your company or your LLP, on how compliant are you, how strictly are you following the law, and if there's any disputes or any outstanding proceedings that are happening with the department. All of that will definitely affect the fundraise. We have seen cases where deals getting delayed or impacting valuations, or transactions getting delayed because there were some, uh, with respect to tax, there was some demand, and then there were negotiations going on between the investor and the founders on what's going to happen, and it's a lot of, it can get messy if your processes and your processes are not in place, and you have a lot of non-compliance. It is definitely a very, very important point that investors look at. It also talks a lot about the founder and the form of governance that is there in that startup, and what are the processes in place, right? So, and it also helps to build trust with your investors. When you're generally more compliant, they end up trusting you. uh, One more point is, if you have huge tax demands and all of that, the investor is always worried that, okay, the purpose for which you raised funds doesn't, you raise funds from him, and you might end up using that money to pay off these tax demands and the litigation costs. Of course, you need to pay a CA or a lawyer for helping you in terms of appearing for the cases. That is always a fear that investors have. So yes, to answer your question in short, it is a very, very, very important point that investors look at when you're raising funds from them.
And I think at every point, it just validates the need for responsible taxation and tax literacy among startups and founders. And to add
Yeah.
to some of your points, if you remember last year, the Delhi Police's Economic Offences Wing actually booked the founders of Go Mechanic, founders
Yes.
and the senior officials for alleged criminal conspiracy, fraud, forging documents, cheating, and falsification of accounts. And
Yeah.
for those who don't know, Go Mechanic is an automobile after-sales service startup. And the founder
Yeah.
later then admitted to cooking its financial books. We spoke about books, and they admitted to cooking their books by inflating revenues.
Yeah.
And about only 2 years before then, they had raised about $42 million USD in funding. And the founder admitted that they had gotten carried away chasing growth. And the result of all of this was 70% of their workforce got laid off. And then the investors went on to appoint a third-party firm to further investigate. I'm not sure where it is right now, but currently I read about them. They've been acquired by somebody called Servizi, and they seem to be doing well and recovered right now because their April to June 2024 quarter, they posted about 85 crores in revenue.
Right.
So I thought I'll.
Actually, one more point, since you brought this up, I just remembered that, just going back to that, how tax is important even in a due diligence point of view. If you say, if, like I mentioned, there is transactional tax in India, right? So you have GST, indirect taxes. How you structure your pricing of your product, because your tax component will definitely affect how you price your product and your margin. So that is also something that's something that we've seen investors start looking at, because they start asking for your costing in terms of, hey, okay, if you're selling a product or this is your service, how do you factor that? How do you factor the cost, and how does tax play an impact on that? Because if your customer wants to pay you only 200 rupees for, this is an example, if you want to sell something and it's for 200 rupees, you have to remember that 200 includes tax, right? So your margin to that extent goes down. So it's very important that you have a good strategy in place for, because you have to take tax also into consideration for your pricing.
Right. Right. And every sector has embraced technology to a large extent, and digital transformation in the government services has come a long way. In fact, in increasing the ease of doing business, among other things. So, how do you see how much has technology simplified tax compliance? You touched upon it a little bit in the initial part, but let's go in deeper, and also let's talk about the PAN 2.0 project here.
Yeah. So, like I mentioned, the government has been using technology a lot over the last decade in terms of increasing their tax base. So, for income tax, you have the e-filing portal. For GST, also you have an online portal. You have something called e-invoicing. Basically, all your invoices are basically generated real time in the GST portal. So it helps the government kind of track your sales and increases transparency. I would say, with respect to income taxes, if you see in the last couple of years, they've started introducing new reports. So it's called the AIS and TIS, right? So annual information system and taxpayer information. So one is a detailed report and the other one is a summary. It's pretty mind blowing, because there's a lot of data that gets captured in these reports, and we see year on year the scope of how much data is getting captured is just increasing. There's a lot of reporting requirements. Let's say a bank, right? So a bank is obligated to report on a lot of financial transactions to the income tax department. You deposit cash, that gets reported. You take a foreign trip abroad and you buy foreign currency for your trip, that gets reported, right? You sell a share, you buy a share, that gets reported, because your demat and is all linked. So it's so digitized now in India. We're so ahead, I feel, in the curve, that so much data gets reported, and it's only a matter of time. This AISTS is something that's just come out in the last 3 years, I feel, 3 4 years, and it looks like they may phase away 26 AS, and this might become the primary reporting documents. It's I will also say, yeah, like even with respect to cash, right? So they're trying to ensure that people have an explanation of, or to discourage cash deposits, basically. So when you deposit cash of more than 7 lakhs or 10 lakhs in a year, I think per transaction it is 2 lakhs, and again it varies from banks to banks. We don't know what stance they take, but so much gets reported that with that they use a lot of data analytics, AI, and try to see, hey, okay, you may have declared income of only 10 lakhs this year, but then you've deposited another 20 lakhs of cash. What is the source for that? Or you've swiped your credit card for 20 lakhs, but your income is 10 lakhs. What is your source for that? Right. So it basically gives them a lot of more avenues to pick up people for scrutiny and start questioning people. So that way it's pretty crazy what they've been doing. Um, Again, they've been using a lot of analytics, and the government has engaged a lot of these big players and AI companies to help them with the analytics and throw out anomalies or red flags which can come out from this. And yeah, this PAN 2.0 is something that's been in the news quite recently. It's about introducing. I think the QR code has been there on PAN cards. When I joined, I had to change my PAN card for some reason when my Aadhaar and PAN had a different name. There's a QR code already. I think it came around 1819 or 1718. But this PAN 2.0 is I think they want to bring in like a single website where all your data of PAN and TAN, all of that can be accessed in a single place. And they're even saying that, if you scan the QR code, you can see your real-time transactions getting updated. Basically it's updated in real time and it's your latest information. So that's pretty interesting to see what the government is trying to do on that front.
That's wicked. And actually, the 2.0 is also for people who got PAN cards before the QR got implemented. It's an optional
Yeah.
system for people to get a QR code enabled PAN card. Because there are a lot of founders listening to this conversation, right? The minute you speak about spending patterns and all of it getting analyzed, there is an opportunity for somebody to build a business around it. Let's say insurance products or credit cards. Before we part,
Definitely.
Mahidhar, what would your advice be to college students and young entrepreneurs watching this? What should they take away from this discussion today?
So I think so I it's important that I feel that they should the founder should basically have a strong focus and they should build a great foundation. If I just take compliance as an example, right? So the founder is always focused on growth, revenue, which is absolutely, and strategy, which is absolutely right. That's what he or she should be focused on. But when you build a strong foundation with good processes, it'll help you build a business which can scale really fast, right? So I would say one is that. Second, believe in your vision. There's a lot of things that in your journey, there's going to be a lot of negative factors here and there, but you have conviction in your plan, and you just focus on that and uh, work towards it. I'm sure that there will be success. Being a founder or an entrepreneur looks very easy from the outside, but it's definitely not. You got to juggle with a lot of things, and there's a lot of learning that comes during the process. And I think the third point would be to seek professional help. Being a professional myself, not only in compliance or taxation, of course. While that is important, I feel even with respect to your marketing strategy, whatever it is always to have a good advisor on board, somebody who shares the same vision, who sees what your vision is and can align with your vision, and they can really help you spend some time, give you advice on marketing strategy. You can give them some advisory shares. But yeah, it's very important that you have a good mentor and have good professional help. So that's about it.
All right, Mahidhar, it's been fantastic talking to you. Tax and compliance is a heavy subject, and we've tried to make this podcast as application oriented as possible. And I can't
Yeah.
thank you enough for making it interesting. And to anyone listening, if such topics excite you, let us know in the comments, and we shall try to explore them deeper with experts. Catch you in the next episode, and until then, stay curious and keep hustling. Thank you.
Thanks, Isha. Thank you. Thanks.